What's going on, Investomaniacs? Your boy Knight Rider here, and today we're going to be talking about GoPro, Fitbit, and Apple. Up first, it's the granddaddy of outdoor sports camera equipment, the GoPro. GoPro has been, and I think still for many years will be, the leader in this space, right? I'm not doubting that. They are the leader in this space. The problem is they've pretty much already grown to the market share that they're going to enjoy in this space. They're losing market share right now. The space itself isn't really growing at that significant of a rate. So the top line, it's just going sideways. Top line's not going anywhere. GoPro tried to venture into the world of drones, and they failed miserably at that. GoPro tried to fail, they failed. They tried to launch several streaming video channels. That was also a flop. The company has lost hundreds of millions of dollars. Now, the bottom line is getting better. I will give them that. But considering there's no top line growth, that bottom line, I mean, that's going to have a pretty low PE ratio that you should be willing to pay for. So we still need to see a significant amount of improvement before you should consider investing. But it is improving. It is getting better. It's just not there yet. So for the time being, we're still going to take a pass on GoPro. Up next, wearable fitness tracker Fitbit certainly has seen its share of competition over the past few years, just like GoPro, continually having cheaper cameras come in and undercut them on the kind of the cheaper side for the people who don't care so much about the brand name of GoPro. Fitbit has had the exact same thing happen, except on both ends, right? Fitbit used to be the leader. They lost that space to Apple Watch, and now they're also losing on the bottom end. Today's wearable trackers, I mean, they are really adding on a lot of new features pretty quickly, right? Just a couple years ago, it was like, all right, maybe we count your steps and that's about it. I mean, today's wearable trackers, they count your steps, they tally up your caloric intake, they let you know how well you slept when you're waking up in the middle of the night, what time you're going to bed, waking up at. They're monitoring your heart rate. That's, I mean, not just monitoring your heart, but then like the Apple Watch is also telling you if you have heart irregularities, and that's a pretty dang important thing. A lot of people are buying the Apple Watch for the health purposes. And by the way, you can share most of this stuff with other users on various social media accounts or with your doctor. Of course, at the high end, like I said, you have the Apple Watch, and they're absolutely crushing Fitbit, have totally overtaken them as the premium option. And then at the low end, you have a Chinese tracker manufacturer like Humai, and they're eating them up at the low end. Basically, Humai offers fitness trackers that kind of do roughly, maybe a little bit less functionality than what Fitbit offers, but basically the same stuff, but at lower prices because it's a generic name, right? At least in America, it's a generic name. They have batteries that last up for up to 20 days compared to only about 3 or 4 days for Fitbit devices. And while the devices don't, the Humai devices don't offer, say, as many customizable kind of cosmetic options as Fitbit does, typically consumers who are now in that lower end or to mid-range demographic aren't willing to pay the marginal difference to upgrade to a Fitbit, because there's basically, you got two types of customers, right? You got the customers who are going to pay the premium to have the name brand, and now that premium option is going to be the Apple Watch. And then you have the demographic who doesn't care so much about the name brand, and they want a good bang for their buck, and Humai and other generic makers are going to give you a better bang for your buck relative to a Fitbit. Fitbit is also trying to move towards the healthcare space by providing trackers that are going to be intended more for medical purposes. Now, this could work out, but it probably won't. This is a space that Apple wants, and Apple is already much further along than Fitbit in this kind of health-related space where people are wearing it for health-related purposes as opposed to just cosmetic purposes. Plus, Apple could literally just buy a healthcare provider, and then it's game over for Fitbit. Fitbit is moving into this space not because it sees opportunity, it's moving into this space because it has to. It lost to Apple on the high end, and it lost to cheaper competitors on the low end, and now Fitbit is trying to pivot and find a new space where they can make money. Maybe it will work, but I certainly would not put your money on the line hoping that this move born out of desperation will work out. The Apple Watch, on the other hand, is doing much better than expected. When analysts kind of when this Apple Watch was initially coming out, analysts were kind of poo-pooing it, saying it wasn't going to be that big of a deal. It ended up actually being a pretty dang big deal. Obviously, Apple is a massive company, so in terms of total revenue, it's still a small percentage, but the Apple Watch itself is performing much better than most people anticipated. Apple announced in their June 2019 Worldwide Developers Conference that their watch lineup would be getting some substantial aesthetic and technology upgrades, including plenty of new watch face displays and better connectivity with outside applications. That's good. There will even be an audiobook feature allowing you to listen to and pause your book with one tap, which is good because a lot of people, they use this like when they're at the gym and they may not have access to their phone, so it's good to have a little bit of functionality on your wrist while you're working out. Apple also opened their watch market to a whole new customer base with the launch of the Swing tennis app last year, which has skyrocketed in popularity in recent months. It's available by subscription, and it allows the watch's wearer to track their speed, distance, and number of shots on the court. It hooks players up with new partners and opponents through user locations, obviously provided you have it turned on, finds available courts and playing times, and keeps track of points and statistics. So a pretty good feature for tennis players to have. Just days ago, Apple Watch was credited for saving the life of a 48-year-old man who had an undiagnosed heart condition. And that's not the first time that Apple Watch has saved a life. There have been many people with undiagnosed heart conditions that Apple is telling them, hey, you need to go to the doctor and get this checked out. And it ends up that they were, for lack of a better phrase, kind of a walking time bomb, and they were able to get ahead of the problem. The Apple Watch is an absolute beast, with Apple's wearables, home, and accessories category seeing revenues increase 29.4% year over year. Now, Apple does not break out the Apple Watch unit sales or revenue specifically, but unit sales are estimated to be up a whopping 49% year over year. I like the Apple Watch, and I like the overall Apple company. Just today, we're kind of specifically talking about the Apple Watch, but overall, I like Apple. It is a buy. Guys, that's it for this video. I put my portfolio for full disclosure, so you know what I'm in, what I'm not in. Let me know what your thoughts are, if you agree, disagree, or if there are any other stocks you'd like me to check out. I appreciate all the likes and comments. Thank you so much, and make sure you are subscribed to Investomania, brother.